Welcome to a new update. Today we're going to look at the crypto outlook for 2023. Last week we've done Bitcoin a little bit already, and now we're going to look at a case of crypto in general. So we're going to look at the total market capitalization and more. Before we continue, make sure to hit the like button, subscribe to the YouTube channel. Also check out our free trade letter, which you can find in the description beneath. 3 times per week you can get free access to all the information you need. I'm providing altcoin setups, the team is giving macro analysis and more. And also from next week on, we're going to launch copy trading, so you can follow my portfolio and the one from our team if you join our premium membership, which you can find in the description beneath as well. When we're looking at the markets, we are into a clear path of crisis as the debt ceiling was hit again. The interest rates are going through the roof. We're getting into a stage where the recession is going to kick in, massive layoffs everywhere, but all of a sudden unemployment remains to be low and the inflation starts to drop off a cliff. So what are we expecting here? Well, we're going to take a look at the DXY first, and we're going to take a look at the Nasdaq second, and then we are diving into the crypto period, or at least what we can expect from the price action from Bitcoin and more. In this case, the dollar has been going downhill, right? So we have been seeing a pretty heavy correction taking place on the dollar, which is very much comparable to the structure which we have witnessed in 2015 and 2016 right here. That's similarly the same sort of structure. So where are we at this point? We have been seeing this massive run-up. The same massive run-up we have also been seeing when we got towards the dot-com crisis here, right? We have also been seeing a run-up when we were into the period of the credit crisis in 2009. Then we had another crash, bounce up, another crash, and then we started to rally again when it comes to the dollar. And essentially, what we're looking at right now is a case where probably the price action will be somewhat the same as in 2015, 2016. So first part of 2015, we have been getting into a stage of correction of the DXY, which resulted into Bitcoin rallying a bit. Then a new rally took place on the dollar, which most likely is going to come quite soon again, which induced probably correction on Bitcoin and risk on assets. And then a big fall off took place, which ultimately resulted into a big bull cycle of crypto. In that way, we're getting into a weekly level for the DXY at this point, in which ultimately the Fed will most likely hike again, but at least they'll pause at some point. So we are waiting for a case where the relief takes place on the DXY, which will probably be towards like 105 to 108 points, from the region of 100 to towards 105 to 108. If that rally takes place, we are going to see a correction of the assets overall. So then I'll be jumping back into the Nasdaq at this point, which ultimately is into a downtrend and continues to be into a downtrend. And the question is, are we at the end stage of this downtrend, or are we actually continuing to fall, in a sense that the price action is comparable to what we have been witnessing in the dot-com bubble, in which the market started to fall quite fast, right? So this was in 6 months. We endured a fall from 4,000 points towards 1.4k points. It would be comparable to the one right now, in which we start to fall towards like 7.1k points. Ultimately, we have got a correction taking place here from a crucial resistance zone, and the trend remains to be down. So if that is going to take place, we probably are going to get a similar structure as we have here, in which we continue to fall, and in between you have got slight bounces, right? So in that way, if the Fed continues to do the hiking process, hikes by 25 to 50 bips, gets above 5%, the Nasdaq is going to make a continued fall, probably towards the area of 10,000 to 9.6k points, before we're going to have some sort of relief. These are the regions that actually are the entry points for that relief, but I think that we still have a bit more to go, and then we're going to have a case where we fall, bounce, and continue to fall, and then we bottom out here before we are going to get into a new bull cycle. And the bottoming process is the actual area where crypto is going to do really well, as it's going to be into a case where people are just fed up with the current structure and are going to jump into crypto. And that way, if we look at the entire case of crypto at this point, what are we looking at for the resistance? We are looking at the resistance at the 200-week MA for Bitcoin, or the total market cap, which we have not been going up this far beneath at this point, but right now it's acting as resistance, which suits the theory that we've got this doji, the markets correct a bit more before they start to shoot off. So in that way, if we can't break above this 200 week MA, which is also the 200 daily EMA, if we can't break above, we are probably going to look at a correction taking place further towards 810 to 860 billion. If we get there, that is your continuation trigger. So if we have a period of the dollar still showing strength, but then the Fed is going to pause the hiking process, standing still as worse economic data starts to kick in, we have a window of a few months to have this rally all towards 1.65 trillion, getting back above crucial levels for support. And in that way, we get that echo bubble that everyone is expecting. But it could be from February onwards towards May, similarly to what we have been witnessing here. So where are we in the standpoint at this point? I think we are somewhere in the region of the beginning of 2019. One more retest before we have such a period of 2 to 4 months in which we rally towards 1.65 trillion, and then the collapse takes place on the markets in the sense that the recession kicks in, markets are going to correct again on crypto, and then from 2024 to 2026 onwards we get into a bull cycle. Now when we're looking at the case of Bitcoin, it's very comparable at this stage. We are beneath the 200-day MA, which is fine, but we're currently looking at a case that we're finding ourselves into a resistance area. We can still have a bit more strength taking place here, but overall you're looking at a case where you want to dive into it from 18.2, which is ultimately a level where people are not going to be happy to jump in and expect new lows to take place, but we're just into this range again. And if we get there, then the rally towards 35 to 45k starts to take place, another correction, and then the real bull starts to take off. Very short update. I hope you have enjoyed it. Make sure to hit the like button, subscribe to this YouTube channel, and I'll see you again soon. Ciao.